I trust you're all well. Excuse my rather raspy voice. A request came through one of the traders that I coach to allow a little bit more interaction, I guess, by opening up for questions that are not related to anything that I'll be sharing. So I've kind of scaled back a little bit what I would have just thrown at you in this kind of session. I'm going to show you Hang Seng 50 and the trades that I took and trades that are still open. However, in the meanwhile, if you have any questions to ask on anything, any chart, I might not be able to get to all the charts, but if you have any question that you have, just please pop it in. Thank you, Malon. Malon has prepared it for us so we can chat. So please do ask questions. It's a request made by one of you, and I'm okay with it. Absolutely no problem. Let's have a look at Hang Seng, what has taken place since the morning. Just a quick look at yesterday. Huge bear candle. Bear sold off quite dramatically. And today, of course, the bears are hoping for acceleration down. We do put our measured moves. So this is what the bears would like. The bears at least would like a huge bear candle, same kind of height as yesterday was, and they want to get to that measured move. Whether they get it or not is something else, but bears coming in, even those that, even if they trade on a higher time frame and they're selling beneath here, their objective is to get down to this level. I'll take this off because I already have it on the 5 minutes. Okay, so just looking at what took place, I mean, this huge bear candle. I was in a session with one of the traders. Few of the traders, who come to the morning session, and we observed this taking place. And at that point, once it closed, we said, well, the measured move for the bears is down here. That's the objective that the bears would want out of the first candle. And if the bulls had, reversed the market immediately afterwards and reversed the high of the first candle and started accelerating up, of course, the bulls immediately that had happened, their objective would be to try and get to that measured move. What then took place is we went sideways. Now, I'm going to just move this line here. Just to mark the low of the first candle, which also happens to be the low of the day at that point. So that was the low of the day. So what happened within the range of the first candle? Inside candle, another inside candle inside to that. Bulls tried to accelerate. Bears, did a decent enough reversal. And at that point, we spoke about that being a potential entry for the bears. And if the bears, took that, then at that point, they had to put a wide stop. But as market went further, just put a stop above there. What bulls created, still interestingly enough, in the first candle, I mean, that was a huge candle. That's 150 points, $150. They created a wedge bottom within that, 1, 2, 3. And bulls would have thought, hang on, we've got a wedge bottom, but we've also got a higher low from that first candle. Okay, so that's what the bulls would have thought. So bulls would have bought above that if they'd wanted. Now, we didn't mark that in the session because we thought, hang on, we bind straight into the low of yesterday. So if you're a scalper, I'm going to put it in. You're a scalper and you are purely scalping, and that's the way that you trade. Then as a scalper, you would need to consider buying that. Scalpers, they buy about bull candles and wedge is fine, but the risk if it turns, you must exit. So scalpers would have comfortably taken that particular trade. We didn't. And they would have had to exit beneath the bear candle. What we got, I think a couple of us got stopped out because, we said once the market's going down, tighten your stop to there. If you'd given yourself a bit of leeway, you would not have been stopped out. But if you got stopped out immediately, there was a decent enough reversal for bears to sell again. So that was another short to take. And now, because at this point, you have the high of the day, you have 1, 2, 3. So that's inside a wedge, 3 pushes, 1, 2, 3, reversal, double top, lower high. So that on its own is sufficient for you to take a trade. And after the wedge and the lower high double tops, you can just put your stop above there. And your objective is to see if we can accelerate down, take out the wedge bottom. That's if you're a bear. Bulls, of course, want that to fail. And then look to see if we can get a breakout beneath the low of the day. I just want to check. Okay, no questions yet. Oh, that's interesting. Let me have a look. Yeah, one of the traders who raised it, or there were a couple of guys, but one of them is in the room. So if you have anything, just pop it in. You can send the message direct to me, not necessarily to the chat, public one, because some guys don't want the questions to be observed. So that's fine. So yeah, bears had their breakout and the follow through, and then we just gone sideways. Now you could leave that trade within there and hoping that the bears will be able to defend the low of yesterday and get more acceleration down. I did that. I've left the trade in there. We might still come back and get stopped out, but the trade is a break even, hoping that the bears can defend. And if the bears can defend and decide to accelerate down, with an opportunity to jump in a little bit later on. Now, I just want to show, I'm not sure who traded through the US session yesterday. But I may have to scrunch it up. It's not going to look neat, but just excuse me. Hopefully I don't lose it. Okay. So somewhere in here, sold off yesterday. Okay, I'm not going to keep going back, but went below the low of yesterday. And then the bears who had managed to hold on through, if they're going to trade through the US session, would have managed to get a lower high here and carried on through. Now that took a long time to materialize. So, I'm not sure whether if you've been up since here, you'd still be holding up to here. So at some point, you might just close your trade and leave it. But if you didn't do that, if you came into the US session, first candle, reversal, that was also not as big as the morning candle. That was $73.73. Could have sold beneath that and sold beneath that. But now then, you're trading through the US session, but that would have been a decent enough trade. So the thinking, it's the same kind of thinking to say, well, It's a break even. And if it's a break even, let's just hold on and see if we get an opportunity for the market to accelerate down. We may not get that opportunity. So, if it keeps going up, I'm gonna leave it to get to that level and see what happens. I might, maybe at a failed test, if we failed test, might close the trade, but the idea is to hold on to it. Okay. All right, so the other market that we had a look at earlier on we have to see, might not have enough time to discuss it, but I'll discuss it with the traders who are coming on to the Wednesdays at the market. UK 100. So the opening candle was here. So if you've been in the market in the UK session, you would have seen this breakout. And this was a potential for a leg 2. Okay, leg 1, pullback leg 2, or leg 1, pullback leg 2. So it would have been prudent to try and sell beneath that, but then you'd need a wide stop. Okay. Stop would have been there at the very earliest. You could have taken that. And hopefully, if you had taken that, you'd have hoped to for the market to accelerate down. You could also have sold beneath this candle. So one of two options. One of two options. That for a leg 2, or even that. Both cases, the stop would have had to be here, and if it had not closed your trades at that point, you would have been stopped out. Then here, low 1, low 2, attempt by the bears to accelerate down. If you would have wanted to take that, you would have. If you're a bull and you'd seen all of this, and you are not in the market selling as a bull, you might have had the opportunity to jump in and buy here. It's not a clean one. Best would have been to wait for a breakout, pull back, and you didn't quite get it. But scalpers, of course, would have taken that one, exited, taken that one, and just held. They get out beneath a bear candle, questionable. Would they have gotten out here, or would they have waited? It's always best to wait for the actual candle to go through. But any scalper will probably have to make a quick decision. So we didn't quite get the breakout pullback, which means that this bull move here is not as strong as the bulls would like it to be. So when you get here, low of yesterday, opportunity to sell, and depending where you've put your stop can't be here, stop probably up above here. Based on that, double top, you could look for an opportunity to sell here or to sell here. But in all instances, at this point, this is the midpoint of yesterday. When you take in the second trade, you could have a tighter stop. You have a stop above here, and then just hold and see what you get. All right, traders. I didn't get the questions that I was expecting, but that's not a problem. Again, I will slow down a little bit in future and allow a little bit of time for questions that may come up. All right, we'll catch up with you next week. And if you're joining me in 15 minutes time, I will see you shortly. Marlon, thank you very much. And I appreciate you opening up the chat box as well. Bye-bye.